Hello, everyone. It's Stephen Whiteside here from the Uptrend.com with this weekend's edition of Protecting Your Portfolio. Well, since the markets closed on Friday, we've had war breakout in the Middle East. We've got the United States and Israel attacking Iran, Iran attacking everyone else, and that is probably going to put some pressure on crude oil on Monday. Seasonally, the first week of March is a bullish week for the price of crude oil. If we look at our weekly panic zone chart, you can see we're projecting up towards $80, and that was before the U.S. and Israel attacked Iran. So we'll just have to wait and see what happens. Last spring, excuse me, we were up at 71.88. That should be an easy target to hit. If things continue over the next couple of days, no idea how high crude oil is going to get. I don't think it's going to get up towards it got to when Russia invaded Ukraine. That was up the $150 level. I don't think it's going to go anywhere near that, but it's certainly going to go higher this week. The price of gold also may see some movement. Historically, the month of March is a fairly quiet month for the price of gold. We're currently incredibly overbought right now. Now, our next target to the upside is 5,625, and above that is 6,250. Now, looking at the month of February, it was very bullish for the Canadian market, with both precious metals and energy stocks continuing to move higher. We were up nearly 6%. The U.S. market, a small pullback for the S&P 500, bigger pullback for the NASDAQ 100. And of course, we're already on a weekly sell signal for the NASDAQ 100 and have been for a couple of weeks now. Next up, let's take a look at the VIX. And typically coming into the month of March, the VIX is heading higher into the middle of March. And of course, if the VIX is running up, we're expecting the stock market to either go down or trade sideways. We're certainly not expecting the stock market to be bullish at this particular time. Now, looking at the weekly price target chart, I just wanted to point out a couple of things here. You've probably heard me say when the VIX gets down towards 1250, the stock market can continue to move higher without the VIX moving lower. And that's typically what we've seen happen over the past few years. Now, look back in 2025, and you can see that we ran up sharply. Once we start getting above 25, that's an indication that we're going to see a major decline in the stock market. At the same time, when the VIX starts running up above 30, if you're long the VIX, you want to be selling into that strength as quickly as possible. The VIX is known to spike and quickly reverse. Now, that doesn't mean the stock market is going to quickly reverse, but the VIX will quickly reverse, and options traders will go from being overly bearish to being neutral, but not bullish on the market. So just be aware of that. I talk to people all the time about, buying the VIX, ETFs, and going long the VIX. If you get a situation in which the VIX spikes sharply, you want to be out of there in a timely fashion. You don't have to liquidate your whole position at once. Sell into strength, sell partial positions on the way up. But remember, you need to be selling and not holding on, because the VIX is not something that keeps going up over time. Now, right now, we're coming into this week's trading action with the VIX on a weekly buy signal. It ended the week up over 4%. So we're not expecting a long-term change in the market direction unless the VIX were to close below 1595 this coming Friday. Now, looking at a daily chart of the VIX, on Wednesday, we actually ended the day on a sell signal. And what I was looking for was a breakdown here. We didn't get that, and I'll get to that in a second. So on Friday, we came back and traded above the upper channel line. We did not close above it. So I'm looking for another close below the lower channel line. And on Monday, that would be 1849. Now, here's the problem, not the problem we have, the obstacle that we have if you're bearish on the market. 2188 has been acting as a level of resistance, and we traded almost up to that level on Friday, got up as high as 2174. To be bullish on the market, I think you want to see the VIX start breaking down below all the moving averages. So over the past couple of days, we've been down to those levels on Wednesday and Thursday, and then we bounced on Friday. So the market really needs to break out of this triangle to the downside if we want to see the stock market continue to move higher from here. Now, looking at the Canadian market, and we're holding up much better than the U.S. market at the moment. Looking at the iShares for the TSX 60, we actually hit our next price target of $50. So if you locked in some profits there, congratulations. Looking at the Vanguard Canada ETF, we're already dealt with the 68.75 level. We haven't broken away from it yet. If we can break away, then $75 may come into play. Looking at the stocks outside of Canada, so the MCI World Index, we pulled back slightly on the week, but just less than 0.5%, so still trading at the 53.13 level. Then looking at small caps moved up to the next price target, hit it this week. We got as high as 37.52. Our target was 37.50. Then looking at the energy sector is still dealing with 23.44. Depending on what happens on Monday, we may be heading up to $25 faster than we would expect. Then looking at the financial, still trying to get to 61.25. We did see the banks hit 62.50 this week, so congratulations anyone getting an order filled up there. Then the global gold index hit 68.75. We got as high as 69.20 on the week, so congratulations. Now, what's not working, it's the tech sector, had an inside week, still holding the 62.50 level. Now, let's finish off looking at the U.S. market, and a little weaker than the Canadian market right now. We've talked about weakness in the tech sector and the financials, and we've got the banks coming down now. There's the S&P 500 trading down to the lower channel line for the last 4 weeks, but not closing below it. That could certainly happen this week. There's the NASDAQ. It's been below the lower channel line for the past 4 weeks and was down just 0.25% on the week, but still on a weekly sell signal. We've got the energy sector continuing to move higher, almost hit our price target of 56.25. We'll probably pass through that on Monday. Then looking at the financial sector, it's been weak for a month or so now. And of course, we were talking about the fact it wasn't the banks, it was the insurance and the brokers dealers that were helping pull the financial sector lower. But now we've got the banks back on a sell signal, down nearly 7% on the week. So a big down move for the banking sector. Looking at gold stocks, they continue to move higher. They broke through the 112.50, headed towards 125. Let's finish off this weekend's presentation looking at the semiconductors. And we made a new high this week, but then reversed and closed lower on the week just by a little over 2%. That's not a lot of volatility for this particular sector. So here we are. We're still trading and closing above the upper channel line. We don't have any red here, but we certainly have an indicator down here. That chevron is telling us that we may have put in a top, but that chevron needs to be confirmed with more downward pressure and ultimately a sell signal. If it doesn't get that over the next couple of weeks, that chevron can fade away. Now, we do have that bearish reversal signal. Again, we didn't close below the previous week's low, so far it is a weak signal. That signal stays in play until we close above this week's high. And you can see here and here we had bearish reversal weeks, but the market eventually played through and closed above the previous that week's high. And then as soon as that happens, you just forget about that bearish reversal signal. Now, what certainly didn't help semiconductors this week was NVIDIA. NVIDIA started to break out above the recent range on Wednesday, and then earnings came out and it fell apart on Thursday and saw fall through to the downside on Friday. So that's not going to help the semiconductors. We came into earnings on a buy signal and then that quickly evaporated. Looking at the weekly chart, we've been on a weekly sell signal since December 12th, and that is certainly not changing based on this week's trading action. We've been in a range for a while now. If we start breaking down below 175, and if we take out the lows from back in November there, and you can see the lows back here in the summer, then 150 is certainly a major area of support. If we go back here to late 2024, you can see where it acted as resistance. So 150 is certainly a target to the downside if NVIDIA wants to continue to move lower from here. Okay, folks, that is all for this weekend's presentation. It's going to be interesting. The future's open in a couple of hours, and we'll see what happens to crude oil and gold, and then ultimately what happens to the stock index futures. War is not necessarily bad for the stock market, but depending on what happens with crude oil, that could certainly have an impact on the overall economy. Enjoy the rest of your weekend. Next time you'll hear my voice is on Monday morning.